I want to get into a little bit about this AGQ. I know it's been demonized a lot because it's pure paper or whatever. There's no, I don't know. I don't really care what the reasons are, but back here at the end of December, I bought some more physical, just a little bit, 50 ounces. Getting sick of buying this stuff. Got American Eagles and some Cougars, at that time, and it was down here. I guess I did pick the low. But, I'm so focused in on physical silver now from listening to all these physical silver bugs. Not thinking, to tell you the truth. And I'm going to PSLV because these kind of funds are evil, right? Well, this evil fund, back when silver was at the low, which I figured my opinion was it was at a low. Maybe it is, maybe I'm wrong. Some people were saying it was going to go down to 25, 22, and all this stuff, possibly. Well, if you bought AGQ back then, the price would have been $40.16, or maybe you wouldn't have caught it there. Maybe you would have got it at $41.65 or $45 or whatever. It's $61. So ultimately, you could have had almost a 50% or greater, possibly, if you caught it just right, increase in a little over 30 days. And I did use this fund, heavy. And I got a quick 230% inside of so many months, off a good chunk of change. So I'm going to say that they're not dishonest. Actually, I think there's some Jewish guys that run as pro shares or whatever it is, and they state right on there what it is. It returns twice the daily movement of silver on a daily basis, daily, not from 1 week to the next, not a 7-day period, not a 14-day period, 30-day period, quarterly period. Because if you just do the simple math, the more volatile silver is. If silver went up 100% or something like that, and it was really volatile over 6 months, you're not going to get 200%. You might get 150% more, roughly. And if it's in a very, very tight trading range, if we're going up very smooth, then you might get twice the daily, close to twice the daily movement over, say, 60 days. Even it might not come out, it might not erode that much. The volatility, just when you figure out the math, and they're not being dishonest about it, and they're not playing no games with you, and they're not. They're telling you flat out what it is. It's twice the percentage movement of silver on a daily basis. So, but I always wonder is, people pick the bottoms for silver for buying physical. I don't know why they don't buy this fund, and dump it. That's, I don't know, beyond me, and I think I'm listening to the physical silver bugs a little too much. Because if you have your money in the paper markets, you're going to lose it, right? No matter what. I mean, you can guess wrong on this, but if you knew for a fact, this was a dip or something like that, and you dumped it after a couple of days over here, well, you can go from, 56 up to 63 and dump it. That's good. Believe me, that's good. Now, the point is, what I'm saying is, people who buy physical are still betting, and what they're really betting on is the total economic collapse in the United States and of the world. That's what they're betting on. And that might not be a halfway bad bet, but and I'm betting that way too, but I mean, I'm not betting all that way. I personally think the US dollar is going to be devalued, as they openly state, but it's not going to be destroyed. They're not going to totally destroy it. I think that's an exaggeration as far as hyperinflation goes. That's my bet on that. So you do want to accumulate as many dollars as possible. And if you know where the dips are in silver, this is a very good fund to use. As far as PSLV, it's not bad, but this Eric Spratt is, to me, he knows how to play his investors pretty well, because when his premium goes up, he knows when to dump it. And I think, well, now he's in stocks, and I know one of them is Endeavor. So that might be a good one to be in. But as far as this, the next time he does another purchase of silver, expect the premium on his fund to get slammed again. And I'm going to try to keep my ears and eyes open for when that's going to happen. Because quite obvious to me, anyway, in my own opinion, is that there was people on the inside that knew this was happening. That's why the PSLV was dropping that Friday, and then everybody bought back after what 11%, 10% drop in one day. That's what you want to do. You want to sell it and then buy it back and keep the the difference. Keep the difference. So this guy, I don't know. I put them all in the same camp. That's why I look at it. And I could tell you the same thing with the physical silver bugs. Everybody's speculating. That's what it's coming down to. As far as oil, I think oil is going to float up to $100. And I'm going to tell you right now, I'm not doing this so much off a technical, and I'm going to say one reason about that, something about that. You know how guys predict the weather? You got guys that predict the weather, and they use a lot of computers. They use a lot of data. They put in the information, actually getting more and more accurate with it. But when they try to do long range, they're bad with it and that type of stuff. But it's not a great analogy, but I think it was this guy Evans Pritchard in England. He was very much, well, his methods were very much out of tune with the traditional methods, but they were in tune with the old methods, which was using the Farmer's Almanac, sunspots, and that type of thing. But he was far, far, far more accurate in predicting brutal winters in the UK, winters that didn't occur in over 300 years or 500 years, and that occurred in Germany, Norway, France, I think northern Italy, Austria, all across Europe, Russia, and he was accurate when everybody else was inaccurate. And sometimes I compare that with just using common sense versus getting too technical with things, because when you're looking at a hard bull market, say for instance with oil, when that was going up in 2008, you had all the experts out there arguing that it was going to go from 120 to 140, and then they were right then saying to 200. And then it had a hard crash faster than even the super bull market was working. And that was, to my mind, was a total setup. They're setting people up left and right. They're setting up investors. So you can use technical information to argue one way or another, but one outside event just blows that right out the door. Now with oil does kind of trade technical because it goes in these $10 ranges, but a lot of the technical to me is very simplistic, just using price points. I mean, oil had a lot of resistance at 95, so if it floats down, it might be 94, 95, might be around the bottom, and there's a lot of resistance at 100. It doesn't take a rocket science to figure that out. So I'm figuring when it gets near 100, I'm going to dump it, because I think they're going to pull this stuff back, and I think somehow this stuff is rigged in a way. They're going to pull it back, and the way you do that is you push news stories that Europe's having a slowdown, and China's having a slowdown, and everybody else is having a slowdown, and then all of a sudden everybody's looking at these things coming out, and prices sell, right? And then they're going to blow up Iran sometime on a weekend, and it's going to go from like $90 a barrel to 120 in a day. So that's what I think the game is in a nutshell. I didn't get that from Lindsey Williams, but that's just me. And I'm going to try to get a position in there cheap. I don't want it at $100 a barrel. Forget about that. I like to get it below 90, but I don't know if it's going to go that low. And I also think, I want to tell you something else. I think, some of these guys that people listen to that are into silver a lot, they'll look at Peter Schiff, big hero. Buy gold, buy silver. Gold is money. And my opinion is, he's just like everybody else. He's out for number one. He's a broker. He runs for office. And I think some people kind of picked up on this. I don't think the majority did, but I think some people picked up on this. He's out for number one. And one thing that always sticks in my mind was a clip. I don't have it anymore, but it was from one of his investors about, Peter Schiff had him, did the standard thing, buy foreign currencies that are heavily into commodities, buy emerging markets, buy platinum, palladium, that type of stuff. And all that stuff crashed because he held him to buy it right before the 2008 crash. And this guy was like retired, and he had all this money wrapped up in his stuff, and he lost like this huge percentage. And, Peter Schiff is arguing with him, telling him, well, politely arguing with him that, the dollar's going to crash and that's the best place to be and all this kind of stuff, But quite obviously, he doesn't know the downturns either. So I like listening to Mark Farber and Jim Rogers. Flat out, those give you good common sense information. I like those two for the best. And, yeah, they're both out for number one. Obviously, they did quite well for number one, too. But he's, if in other words, say gold went to $2,000 an ounce, all the gold bugs will be telling you, 2,500, 2,800. And, Mark Farber might tell you a little different. He might tell you, well, I think there might be a pullback now, or something like that, right? He might say that because he hit an all-time high. And, that is really not the time to jump into the market. To tell you the truth, you want to be in there when everybody's telling you, it's crashing, or whatever. I mean, because after it made its move and it's getting up there, the market starts getting dangerous. And now, how many people probably bought silver over $40 and they tell them it's a good deal? Well, that's not such a great deal to hold something that's worth less a year later, right? I mean, that's not a good deal. That's not a good deal. But, I'd be scared to buy this pro shares when silver starts getting near 50. I'd rather be in it low and then dumping it around 50, even if silver's going to go past 60. It's a dangerous fund. It's a dangerous fund because it moves twice as fast as silver. And it does erode. And it's not because they're crooked or anything like that. It's because that's just the way the math works out. And you have to remember, it cost them money to run this fund. It cost them money. And they're probably some Jewish guys, and I'm sure they're working very hard. They're not lazy. I'll tell you that right now. Jewish guys, they ain't lazy, man. They work their ass off. They work their ass off. So, I think there is some Jews that run this pro share stuff, or some of them are in there. And to tell you the truth, they work hard. They work hard. They're not screwing. I know there's some out there that crook people, but I'm not. Generally speaking, that ain't the way it is. That ain't the way it is. So if silver's going to hit a hard dive or something like that, if you would bought this AGQ back here, you would have been making out like a fat rat over this time period. Now, obviously, if you bought it over here, you took a nosedive, right? You took a nosedive. But right now, even these double leverage funds aren't that super dangerous because you could probably hold on to them long enough, and as silver gets up to $40 again, it's probably this thing's gonna return a hell of a lot better than physical silver or the Sprott fund. So it's not too terrible, and but like I said, I'll probably try, if I see silver go down hard again, I'll probably buy a little bit of AGQ. And if it's a hard pullback because of psychological news, definitely buy more of AGQ, because a lot of times those things have a way of working themselves out. Like, the euro's going to crash, and then all of a sudden the euro's not going to crash, right? And then I'll just keep it for whatever I get a gain, and that's it, it's done. But that's the way I play the stuff,